US dollar has crossed 108 on the DXY index, the levels we have not seen since early 2000, and this is causing a major havoc on the global economies. Why this is happening and what are the repercussions on the global economies going forward? In this video, we're going to talk about that. So let's go. Alright, if you're new to my channel, my name is Yasin Nizami and I make these videos to educate you as a common person about the real estate market in Canada, some macroeconomics, some money matters, how the financial system works, how the global economy works, so that you can make an educated decision about your financial well-being. So if you want to learn more, don't forget to subscribe and share this with your friends and families. So the US dollar has crossed 108 on DXY. But first of all, what is DXY? DXY is an index where we measure US dollar performance against the basket of 6 major currencies. So those currencies are Euro, which has the biggest contribution in the DXY, close to 58%. Then British pound, then Japanese yen, Canadian dollar, Swiss franc, and Swedish krona. So among these 6 currencies, we measure US dollar performance on the DXY index against the basket of these currencies. So what's happening recently that US dollar has been climbing up against the basket of those currencies, and this is causing major issues in the global economies. Now, first of all, why this is happening? I will use an analogy of a seesaw where you can see 2 kids, sit on each corner of the seesaw. If one kid on the left hand side is less heavy, then of course the kid on the right side will dominate the weight of that seesaw, right? So this is exactly what's happening on the DXY. Other basket of currencies are getting weaker or devalue against US dollar, which is automatically pushing US dollar up on the DXY index. And one of the major driver of this is Euro. So Euro has been at its lowest level since its inception. Now it is equal to 1 US dollar. When the currency that has the major contribution on the DXY against US dollar drops to its lowest level, you can imagine what's going to happen with the US dollar value. Similarly, British pound and Japanese yen has been declining downwards, which is also contributing to push US dollar up on the DXY. Now, this is the technical reason why US dollar is climbing up against these currencies. What is the logical explanation on that? In these economic times where we see the inflation is running hot and the US Federal Reserve has increased the interest rate way earlier than its counterpart. For example, Bank of Japan hasn't increased the rates yet. ECB hasn't increased the rates yet, although they're talking hawkish, but they haven't done anything material to increase the rates yet. Bank of Canada did that, but I think they're not that important at the global scale. When we look at the US Federal Reserve, they are jumping the rates up, which is also adding fuel to the fire in the global economies, because when you do that, then the global debt, which is denominated in US dollar, that debt becomes even more expensive, and the debt servicing cost, which means the interest payments on that debt, that becomes even more expensive, especially if your local currency is not in US dollar. That means you have to print more of your local currency to pay back the existing debt or roll over the existing debt to the new one. So that basically put downward pressure on the local currency and upward pressure on the US dollar. But there's more to it. When you have the inflationary times and you have these wild economic situation where everything is collapsing, crypto, stock market, commodities, even precious metal is getting hammered. In these economic times, the investors, especially the institutional investors and the big governments, they want to make sure that their cash is parked somewhere safe, like a safe haven, and US treasuries in these environments are proved to be the winner because it has the least counterparty risk, which means the US government is less likely to be default on their bonds and treasuries obligations. So a lot of institutional investors like banks and hedge fund owners and the governments, they funnel their US dollar into US to buy US Treasury. So that creates an excessive demand of US dollar in the global economy. So if you don't have US dollar in your reserve, you would buy those dollars by exchanging your local currency in the forex market, which basically creates the demand against the local currency. And that's really the logical explanation of what's happening in the global economy. So when you see the dollar is getting expensive, it means we are likely to see the dollar liquidity crisis in the global economy, because from an emerging economy perspective, you need dollars to make your international payments settle. Whether you're buying oil, whether you're buying any commodities, or you're buying raw material for your production, you have to settle those transactions in US dollar. And when the dollar becomes expensive, not only it reduces their buying power in order to pay for their commodities and raw material, but also it creates domino effect for their local industries, because if they cannot produce more because their purchasing power is reduced, then they have to take other measures like layoffs and other cost cutting in their economic cycle. That creates a lot of economic trouble in those emerging economies. This is exactly what we are seeing in the countries like Sri Lanka, Lebanon, Turkey, Pakistan, Argentina, Brazil. All those emerging economies are going through these massive economic pains, higher inflation, purely because dollar crisis, because if they don't have enough foreign reserves in their central bank against their local currency, then of course their local currency gets devalued and it pushes up the inflation rate much higher. And because of that dollar crisis, their purchasing power is reduced. They cannot buy commodities, they cannot buy raw materials, which actually creates a lot of economic trouble for their own local economies. They cannot produce enough, they cannot contain their labor forces employed, their unemployment goes up, and yada yada yada. So you know the story, right? So this is causing major repercussions in the global economy. It's already happening in the emerging economies. It's going to spill over in the major economies like Japan and UK and Europe, and it will eventually impact US, because people think, okay, we can just print dollars and we should not be worried about that. But the point here is, yes, you can print dollars, but you cannot have stuff to buy if the other economies are not producing as a result of the higher inflation rate and higher dollar rate against their local currency. So this is going to be a major problem if the dollar continues to go up on the DXY. But in these economic conditions, when the Federal Reserve is hiking rates and the other central banks are not, this is going to add fuel to the fire, and this will make the situation even worse. I hope this is helpful. If you like it, give me a thumbs up, add your comments down below, and I'll see you in my next week video. Take care.